When GST was launched, one of the stated objectives was that it will improve tax collection for the government. As GST completed 5 years in June 2022, it is useful to look at how the GST collection has fared. Both the union government and the state governments earn revenue from taxes other than GST as well. This video focuses on the revenue collection from GST. The annual GST collection has grown from Rs 11.8 lakh crore in financial year 2018-19 to Rs 14.8 lakh crore in financial year 2021-22. In terms of absolute numbers, therefore, the collection has improved. However, looking only at the absolute number doesn't give an indication if the collection has increased because of inflation or increase in economic activities or any other reason. Another indicator generally used is to look at the collection as percent of GDP that tells us how GST collection is doing in comparison to the economy. In terms of this indicator, GST collection has remained more or less unchanged at around 6% of GDP since its inception. When it was implemented, several taxes levied earlier by the union and the state governments were subsumed under GST. The total GST collection is divided between the union government and the state governments on the basis of a pre-decided structure. Let's have a look at the GST receipts for the union government. The collection in 2017-18, which was only for 8 months in that financial year, was Rs 3.8 lakh crore. In 2021-22, it reached Rs 5.94 lakh crore. Coming to the state governments, the performance of GST collection varies across states. To assess the performance of GST, several studies have looked at the growth rate in GST collection and compared it with the growth rate of taxes which were subsumed under GST. One such study suggests that out of 31 states and union territories, only 8 have seen higher growth rate of collections under GST. In the remaining 23 states and union territories, growth rate of collections was higher under the previous tax regime. However, we should keep in mind that the GST period also includes the COVID-19 pandemic years, which negatively impacted economic activities and hence GST collections. To assess the performance of GST, taking into account the changes in economic activities, GST collection can be looked at in relation to the gross state domestic product or GSDP of the respective states. A study comparing the pre-GST tax collection with the collection under GST finds that in 20 out of 22 states and UTs, collection from GST as percent of GSDP has been lower than the collection from taxes which were subsumed under GST. The only 2 exceptions are Uttar Pradesh and Rajasthan. But even there, the increase is a mere 0.05% and 0.03% respectively. Uncertainties regarding how the tax collection will pan out were expected at least in the first few years. This issue was particularly important for states as in relative terms, they had to surrender almost twice their tax revenue towards GST compared to what the union government had to surrender. To allay the fears of any revenue loss, states were given constitutional guarantee that if their collection from GST grew at less than 14% in any year compared to their earnings in 2015-16 from taxes subsumed under GST, the gap was to be compensated fully by the union government in the first 5 years of GST. This period of GST compensation guarantee ended in June 2022. The implications of the end of the GST compensation phase for fiscal health of the states will vary across states. In the financial year 2021-22, in at least 10 states, GST compensation contributed more than 15% of states' own tax receipts. Therefore, to make up for the possible shortfall in revenue because of the end of the GST compensation guarantee phase, these states would need to increase their revenue from the taxes which they can still levy. Even before the GST compensation period ended, several states had either changed rates on existing taxes or introduced new taxes. But there are limits to how much tax rates can be increased. In the immediate future, there are other things needed to improve the GST collection, like the revival of the economy, increase in GST rates on certain goods and services, trimming of the list of items that are exempted from GST. Some of these are already in consideration. If these two do not help, medium-term solutions will need to be found. These changes may be necessary to ensure that states' fiscal stress is reduced. If not done, several states may need to cut expenditure, including on important social sectors. Thanks for watching the video.